Welcome back. Well, the market is all over the place, really. Now it's absolutely quiet, but there are those tumultuous moves that you're seeing, just consolidating around 18,000 levels. December auto sales indicated a big jump in the commercial vehicle sector due to the return of infrastructure demand and resumption of bus sales due to offices and schools reopening. Also, the CESL tender discovered that it's 29% cheaper prices for electric buses versus diesel ones. So what are the opportunity for the bus sector, especially in the electric vehicle space, and what's the outlook for commercial vehicles? We have Vinod Aggarwal, Managing Director and Chief Executive Officer of Volvo Eicher Commercial Vehicles at Eicher Motors, and Kale, the Senior Vice President Research at Elara Capital, joining in. Gentlemen, morning to both of you. Happy New Year and hope you have a great year. Mr. Aggarwal, I want to start with you. The month of December was very strong, even for Eicher Motors in the commercial vehicle segment. Good jump both year on year and month on month. Tell us a little bit about where the demand has come in from and what do you see as a sustainable growth?
Absolutely. I think the month of December was very good for the industry as a whole and also for our company, VCV. As you know, I had been mentioning that earlier also that we are going to see good growth in the CV industry because now CV industry is on the recovery phase after 2-3 years of recession, and this recovery is absolutely in line with our expectations, and of course we are still away from the earlier peak levels. So therefore, there is still more room for recovery. So we will see recovery coming in this, especially in the bus sector as well as the heavy duty trucks. But some of the sectors like medium duty trucks or small commercial vehicles, there already we might see the new peak in the current year itself. So therefore, it's in line with our expectations.
So could you just help us with some numbers when you say new peak? You know, if you look at the last 8 months, the run rate has improved quite a bit. I mean, this time the wholesale numbers have crossed 7,000 units. You haven't seen that at least in the last 12 months. What could the new peak be? What is the average monthly run rate? And on the retail front, what are you clocking in?
If you look at the numbers, when I say new peak, if you look at, say, 5 to 15 ton industry. 5 to 15 ton industry, earlier peak was 118,000 in the year 2018-19. Now this year, first 9 months, this industry is already at 88,000, 5 to 15 ton. Now last year, the Q4, Jan to March, it was around 37,000. So if you assume that there will be some growth on that 37,000, and if you add that to 88,000, that has already happened, you arrive a figure which will be a new peak in the current year as far as this 5 to 15 ton is concerned. Similarly, sub 3.5, there will be new peak because already we are going to cross the earlier figures of 1890. However, if you look at the buses sector, in the bus segment, the earlier peak was around 70,000. Now this year, already if you look at the numbers, in the bus sector, we are at 9 months at 40,000. And last year, first 9 months was only 9,000. Now this year, the industry in the balance 3 months, we expect to be another around 17 to 18,000. So we will be at, say, 58,000 for the industry. Now that will be still away from the earlier peak of 70,000. Similarly, if you look at the heavy duty trucks, the earlier peak was 200. The heavy duty trucks was it was 295,000. Now this year we have already reached in the first 9 months 165,000. So still it will be, if you add the balance 3 months, it will be away from the earlier. So some segments new peak, some segments still away from the peak.
All right, Mr. Aggarwal, you're sounding reasonably optimistic, and the hope is that FY24, getting into an election year, hopefully the CV industry continues to do well and maybe breach the FY19 peaks that we saw. Let's get a couple of numbers going then. First 9 months you've done rather well. The growth is close to around, I think, 40% on a low base. For the remainder of this year as well as for FY24, what kind of a volume growth can you do? And I just wanted to quiz you, exports are a small part of your business. But there has been pain, if I look at it on a December to December basis, even in the first 9 months, there's a sharp degrowth out there. What's your sense out there?
The exports, the entire exports out of the country, that is under stress for the entire industry, because there is a severe foreign exchange shortage in some of the South Asian countries. And that is leading to very low export to those countries. And exports, if you look at as an industry, the exports for the commercial vehicles, that has dropped by almost 18% in first 9 months, whereas the entire domestic sales are growing by 49%. The exports have dropped by 18%. So therefore, exports is a concern area for the entire industry, and in line with that, our exports also have come down.
Okay. Mr. Aggarwal, do stay on. Jay Kale is also with us. Good morning, Jay. Thank you for your patience. Where do you think we are in the, CV cycle? It normally runs in 3 years, doesn't it? So, do we still have a goodish bit to go?
Yeah, good morning, Lata. I wish you a very happy new year.
Thank you.
Yeah, so, like Vinod, you mentioned, CV industry has, been on a improving trend in the last few months, specifically also in December, we saw strong numbers from the industry. The way we look at it is, if I have to evaluate the M&HCV industry, which is, as per CM classification, anything above GVW of 7.5 ton, we had seen a peak of 3,90,000 units or the domestic volumes in FY19. And if you see, historically, it's been a 6-year cycle from peak to peak. The earlier peak was in FY12, which was crossed in FY19. Our expectation is that the next peak of FY19 will be crossed in FY25. So we still expect a double-digit growth in FY24. And the confidence of the double-digit growth has, in fact, only strengthened with the last few months of strong sales. The infrastructure segment has picked up. Some bit of December was also, in our view, helped by the impending price hikes that were expected to come in Jan. We need to watch out for how the transition to the RD norms happens from April, and hence the rationalization of inventory in Q4. But those are transitionary issues. Overall, I think we are expecting FY19 volume peaks to be crossed in FY25. So we will see a good double-digit growth in FY24 as well for the M&HCV industry.
Okay. Mr. Aggarwal, I wanted your thoughts on the market share update. What is it so far, year to date? And is there any segment, because buses are picking up in a big way. There's a lot of talk from the CESL, tender ordering as well for EV buses. Your own market share in the bus segment has gone up as per the last quarter. So tell us, across the board, where are you gaining market share and what is the prognosis now?
We are improving market share in all the segments. If you look at heavy-duty trucks, in heavy-duty trucks, our market share is now more than 8% for the first 9 months, both for the Eicher and Volvo trucks. And if you look at the light and medium-duty trucks, our market share is 30% plus, which is almost equal to the last year's market share. And if you look at the buses, our market share is now around 25%, which is much more than the earlier market share of around 19-20%. So we have improved market share in heavy-duty trucks as well as in the buses segment. However, the market share in the light and medium-duty trucks is flat at around 30%.
Okay, all right, Mr. Aggarwal, the cycle seems to be turning and we seem to be seeing strength in the CV cycle. Then what's happening on the discounting front? Do they still exist? Are they narrowing?
I think there is a lot of realization all across, and because if you look at the bottom lines are under severe stress because of the high discounting, and there is realization at all the companies levels. If you look at previous announcements, of course, we at VECV always wanted to control the discounts, and we are trying our best to cut down the discounts. However, it is a competitive situation, and because everyone has its own strategy, each company.
Yeah, Mr. Aggarwal, you want to give us a couple of numbers? What were the discounting? What has it come down to?
These are no fixed numbers. There is no fixed number that so much is the discount. It is always deal to deal based. There is no such.
Okay. You also mentioned earlier that the segment market share in the bus segment has risen to 25%, higher than what it was earlier. I wanted your thoughts on what is the opportunity for electric vehicle bus makers, for companies like yours, considering that this CESL tender is quite big and now they've discovered much cheaper prices for EV buses compared to diesel and petrol. What is the opportunity here, sir?
First of all, the electric buses, the industry is evolving, and this is just the beginning of the volumes. And this is the second tender which was run by CESL. And of course, the current model, business model, which is there by CESL, this is a very, very challenging model for the entire industry. As you would have seen in the last tender, in fact, 2-3 large companies, they didn't participate. We also didn't participate because this model is for at a GCC model where the OEMs have to fund these buses for 12 years. It means the OEMs don't get the money against sale of these buses. So you have to realize on per kilometer basis for next 12 years. It indirectly means you are giving the loan to state transport undertakings, because these buses are going to be run for state transport undertakings and companies are going to take the risk on their balance sheet. So it means I am supposed to raise the loan on my balance sheet for 12 years for selling these buses to STUs. So that is why this model is very, very challenging. And of course, the last tender has been successful. And I have seen the announcement that there has been reduction in the costs. But at the same time, it is going to be very, very challenging for the entire industry if the model continues like this.
Okay. So, Jay, what is your thought on this? Do you think the way the EV bus system ecosystem is evolving, this can disrupt existing players, or do you think the ordering will change?
I think, see, these are, I totally second Vinodji on this. These are initial days on the EV buses side. The pricing is yet to be evolved. There will be a time frame, of course, like you mentioned, that 10 to 12 years is a long time for the OEM manufacturers to take these vehicles on books. And mind you, what I understand is that the inflationary pressures are also of the operating these buses are also built into this per kilometer pricing. So these are quite competitive prices. I think as we move forward, there's a lot of STUs which are expected to turn into EVs. And as we move forward, this, OEMs will realize, and the price discovery on real operations and the challenges in really operating these vehicles on road will be known. And then eventually a lot of shift of market share could also happen basis the experience of the existing OEMs who build, and eventually, these prices could get adjusted. But for the moment, in our view, these are extremely competitive prices for the kind of issues that could also come in going forward in operating these buses. But still early days, I would say.
Okay. Would you scale down your earnings estimate for the sector as a whole, Jay? Because A, demand is under pressure. B, you have the new emission fuel safety norms as well that are coming through from April. So that may hit demand further. Would you scale down your earnings estimates?
So, it's different for different segments. So, for example, in the last couple of months, CV segment, I don't see any downgrades over there. In fact, if at all, there would be minor upgrades on FY23 numbers. Not so much on FY24 because our expectation has not changed for the absolute numbers that we expect for FY24. So, CV segment and tractor segment, no really change in numbers. If at all, some upgrades as well. Passenger vehicles, because of the chip shortage, we have seen some bit of downgrades, but very minor downgrades in FY23, and some bit of pressure on the entry-level segment. And two-wheelers, of course, we were relatively lower in terms of the volume growth expectation in FY23. Demand is slightly soft at the rural side, post-fag end of the festive season where demand kind of improved. In December, we saw again a softness in demand. So, PV and two-wheeler may be minor downgrades, but not so much in CVs and tractors.
All right, we'll leave it at that. Jay and Mr. Aggarwal, thank you very much indeed for joining us and giving us a 360-degree perspective of the CV sector and the bus sector. Have a fabulous 23. Okay, we now move on to another company that's in the limelight. Castrol India is the one we're going to speak to on the news that the company has entered an agreement to acquire around 7% stake in Key Mobility for a total consideration of 487 crore. To alert our viewers, we understand that KI or Key Mobility is a part of the TVS group and is among the leading players in the auto service, maintenance and repair space. To discuss more on this, we are joined by Sandeep Sangwan, Managing Director at Castrol India. Good morning, Mr. Sangwan. Thank you very much. It is Key Mobility, isn't it? I mean, that's the way to